Brian, what's important in your mind right now with Iowa and New Hampshire under our belts?
That we've winnowed the field a little bit more. The Keller's report about the field narrowing. I think it's narrowing pretty rapidly, that we're going to be down to 3 or 4 candidates. The top 3 last night and Michael Bloomberg. And whether they want to acknowledge it or not, Senator Warren and Joe Biden are on life support. And I don't see a realistic path forward for either one of them. So we're kind of down to 4 candidates, and they're going to battle it out over the next couple of weeks.
Is it surprising to you that the market's not reacting more negatively to Sanders, or is there just too much else going on? Causal reduction is not a good thing.
No, I'm not that surprised, because I don't think the market takes his candidacy seriously, that the prospect of him winning seriously. For example, there's a Gallup poll out showing that 60% of voters think they're better off today than they were 4 years ago. It's a plus 24-point swing in Trump's favor. And in that kind of environment, and I think investors just kind of intuitively understand this, they think that the base case is that Trump's going to win, Sanders or no Sanders. And actually, they probably think that Sanders is the weakest of the 4 Democrats that are kind of left in the race.
Andrew, I'll put the same question to you, whether it is this presidential election or whether it's coronavirus concerns, the fact that we have fresh records for the Dow and the S&P right now. What's driving it? Does that make sense?
Yeah, I mean, I think that's an important point, is you've had some negatives that hit the market. Coronavirus caused a 3.5% decline peak to trough. That's not much. You have a radical candidate who's won the first 2 primaries, and the market's hitting an all-time high. I think you have to take a step back and ask what is going on. Is the market whistling by the graveyard? And I think the answer is that we're seeing a classic case of a capitulation year, where people were too bearish last year, and they're taking advantage of every pullback to reverse their direction and get in. And that is mitigating the pullbacks or the bad news hitting the market. So I think this is all about the reversal of last year's overly bearish opinions by people.
Andrew, we're seeing that even as the dollar has rallied in recent days, in recent weeks. That stronger dollar, is that here to stay? And how much of a risk, how much of a drag could that be on earnings this year?
Yeah, I think that's a great point. Look, I think the opportunity right now in the market is to fade the stocks that have all rallied on this perceived global weakness that's going to cause by whether it's the Boeing strike or the coronavirus, and to go back into the value areas that have really underperformed since mid-December. But I noticed some of the banks are starting to break out again. I think the point is that the economy, I still think the economy is going to surprise on the upside this year, albeit it might temporarily look weak in the first quarter. And I think the opportunity set is more in the value areas, the industrials, financials that have traded off on this immediate negative news.
Hey, Brian, one market watcher I follow this morning said the best bear case he can think of right now is that Powell doesn't follow through on expectations for a rate cut this year. He was a little circumspect yesterday in front of the House, and that's one reason some say market got dinged in the latter half of the session. What are the politics right now behind a Fed cut in an election year?
I think for the Fed, it's just steady as she goes. I mean, I think Powell has been he's been attuned to what the president's been saying, but he's been trying to keep his distance. I think he's going to play it right down the middle, not get drawn into the election, but not carry water for the president. So I see the Fed staying fairly apolitical in their traditional role, not pumping up the economy, not hurting the president's chances. I mean, Jay Powell wants to maintain some level of independence, or the appearance of independence for the Fed. So I think he's trying to maintain a posture of independence and neutrality as best he can. And sometimes it comes across as being a little bit more hawkish than he would be otherwise. But I think he's trying to protect the Fed.
Andrew, is that your take as well?
Yeah. I think the biggest negative for the stock market this year, in my opinion, It will come in the second half of the year. If the economy shows a lot of strength, will the stock market start to worry, not about a Fed cut, a Fed reversal after the election and discount that in advance? That, to me, is the biggest negative for the stock market, but that's not now. That'll come later in the year.